Hello and welcome back to Lipper's Fund Flows Insight. I'm Matthew Lemieux. I hope everyone enjoyed their Independence Day holiday. And although these flows are through the week ending the 4th, it's actually through the 3rd, just since we all know that the markets were closed, just to let you know. So, big news, I guess. Quarters ended, and I think a lot of people really kind of let out a sigh of relief because looking back in May, I think a lot of people expected for the quarter to end a lot worse than it did. I mean, if we actually look at the S&P 500, yes, for the quarter we were down about 3.3%, but we really had strong returns in June, about 3.96%, and if you look at the year to date, we're still up 8.31%. So overall, compared to the global market and some of the things going on in Europe and other markets, I think a lot of people are feeling comfortable where we're standing, even though there still is uncertainty out there. We did hear on Friday some news out of Brussels that the Eurozone may have came up with some better policy, especially maybe more towards a fiscal union. So that really kind of jumped stocks up. But still, it really hasn't been implemented, and we've been in this situation before where we've heard a lot of words out there. So we'll really have to hold our breath, see what happens there. But overall, with the quarter ending, let's actually take a look at how the numbers fared out with our fund flows. If we actually look at the larger macro groups, mutual funds for the week actually pushed out about $5.9 billion. If you look at equity, really flat, about $100 million out. Taxable bond funds continue to draw assets, $1.3 billion in, and once again, municipals do quite well, $300 million in. The big story, money market funds, and really kind of teetered it down into the red, $7.4 million out for the week. So overall, let's talk about equity. Again, this week about $100 million out. We've really seen a lot of slow down pace when it comes to mutual fund equity investors, and I think it's still a lot of investors sitting on the sideline, not feeling any immediate need to jump into risk assets, kind of feel comfortable where they're at. If you actually look at the last 4 weeks, it's basically a wash. If you look at the 4-week moving average, somewhere around negative $7 million. So it just kind of shows you really not much action at all in equity mutual funds. I mean, we did see continue some movement on one side or the other. Or domestic equity is kind of still the bane, $711 million out, and people still kind of going towards non-domestic with about $584 million, of course. The vast majority of that, again, is towards emerging markets economies. So equity mutual funds, not that great, not that much movement. A lot of people just kind of, like I said, sitting on their hands. But let's look at the other side of the coin at ETFs. If we look at the next slide, we take a look at the top 8 ETF by assets. Overall, equity ETFs brought in $10.5 billion, a pretty impressive number. But if you look at it, most of the action, of course, is coming from one product, SPY, the Spider S&P 500, with about $7 billion in. That's the largest amount they've seen since December. There's some other notables on there, is Triple Q as well as iShares S&P 500 product, both bringing about $500 million. So we see some positive sentiment in the equity markets, but again, it looks to be more some larger institutional plays. You can see some window dressing maybe as the quarter and H1 comes to an end and people need to really shore up their positions. Overall, I think nothing that really kind of sings to the overall sentiment in the market. Let's go on to the next group, which is taxable bond funds. Taxable bond funds see their 4th consecutive week of inflows of $1.3 billion. And again, we've seen some teetering back and forth. The vast majority of that money going into high yield. It's also their 4th consecutive week of inflows with just about $600 million coming in. They really had a rough end of the May. The high yield products came out, but they've seemed to come back, and really investors still feel comfortable going for that yield. Mortgage funds also are a place to go. We've seen that continually. We actually seen 31 consecutive weeks of inflows into mortgages, $417 million this week, as investors still, I think, feel comfortable that maybe housing's at a bottom. Foreclosure rates are going to stay where they are and just improve, so a lot of investors feeling comfortable with that. And then the last is investment grade, which is kind of more your high quality, $100 million coming in. Not much movement there. I think investors, again, mortgage, high yield, looking for a little bit higher yield than what you would see in general highly rated corporates. If we look over to the next slide for taxable bond funds, we also see the top 8 ETFs by assets. And with this group, we saw overall taxable bond ETFs push out about $1.4 billion. I mean, the real story here was we saw about $2.1 billion coming out of Treasury products, especially the shorter term Treasury products. If you look at SHY, about $1 billion out of that. Also, if you look to the 3 to 5 year range, we saw another $1 billion coming out of those products. So a lot of investors really kind of getting out of the short end of the curve, possibly due to the Fed coming out saying they're going to extend Operation Twist, so that's not going to help them anywhere there, as well as possibly this policy announcement out of Brussels if they can start start shoring up some of the concern overseas, we'll probably see a little bit of upward pressure on short-term yields here in the United States. Let's go to the third group, which is municipal bond funds. Again, municipal bond funds have done quite well throughout the last few months. This time we see about $300 million coming in. Of those, national munis brought in about $334 million. Even though we've seen about half of the numbers we've seen before, this is their 12th consecutive week of inflows. So it's still investors feeling very comfortable with munis. If you look at high yields, some investors also going after the yield with about $143 million going in there. So even though it seems a little bit of slowdown, maybe partially due to the holiday week and to the quarter end, investors still feel comfortable with municipal debt. Last group is going to be money market funds. This has kind of been the up and down group we've seen for quite some time. This week, $7.4 billion out. And again, there was some really big stark contrast of where the money was going out and where it was coming in. Institutional money markets pushed out about $11.3 billion, while retail money markets brought in about 3.9. So if you look at that retail number, overall, it still seems like investors are feeling comfortable putting some money on the sidelines, even if that means yielding nothing or actually having negative yields, paying the government to hold their money or whatever money market they're going to. So still that market's still struggling, but still a sign that some retail investors feel more comfortable on the sidelines. So overall, you know, it's been an interesting end of the quarter this last week. We really see not that much movement going around, the big jump in equity ETFs, but again, I don't think it's a general sign of any sentiment one way or the other. Going forward, I think a lot of investors will be looking at some of the upcoming news. Tomorrow we'll be looking at non-farm payroll numbers, and we've seen some numbers out of the ADP numbers which were higher than expected, although we know there's not always a high correlation to what we end up seeing with non-farm payrolls, but a lot of investors, it caught their attention. We also see initial jobless claims drop. So I think if we see some good numbers coming out, it'll be really quite well for the equity markets, but I think it might be a bigger net negative if numbers come in less than expected, as investors are still somewhat concerned if we're going to kind of stall out, as we saw the manufacturing numbers were also not so good. But we'll have to see how that goes. Otherwise, I think it might be a little bit slow until we start seeing earnings come out and see how investors really are going to approach the third quarter, especially as we come to this looming election. So it'll be some interesting news out there that might drive the markets. If you'd like a little bit more information about the data we've gone over, you can visit our website. It's www.lipperusfundflows.com. You can dig a little deeper there. Otherwise, you can join us next week, and we'll go over the flows for then. Otherwise, my name's Matthew Lemieux, and we'll see you next time.